What for me? Well, welcome everyone to the live stream. Here with me is Dan Frio. My name is Kyle Seagrapes. So we're loan officers licensed in all 50 states. And what we're going to do on this live stream is we're going to answer your home buying questions that you have. So ask those in the chat and we'll get to those. And then we're also going to talk about two conventional loan grants that you can use in 2024 that we have access to and we've used with our clients. Kind of the big issue with a lot of like down payment grants are, one, they have to be paid back, or they come with some sort of like strings attached. You know, you can't sell within a certain period of time without having to pay it back, or you have to pay it monthly. And these two grants have no interest rate because you don't have to pay them back. They're completely forgivable. There's no restrictions on it. There's no monthly payment on it. And so we will talk about those. Dan, how are your holidays and New Year's?
It was fantastic. I drove from Chicago to West Virginia to have dinner with my mom Thursday, my in-laws Friday, drove back on Saturday, and now I can't get enough sleep. So it was awesome. Then New Year's was a blast, and we're back at it. So the crazy thing was yesterday, I think we came in, I had 12 pre-qualifications to do and 2 or 3 contracts in. Somebody even got a contract accepted the night of New Year's Eve, which was fantastic. So you guys are keeping us busy out there. Thank you so much.
I like it. Also, I'm amazed that we have almost 80 people in here now on the multi-stream. Normally, we don't have that many people. So I'm not sure what's going on or why everybody's here, but I'm glad that you're here.
People love our entertainment. We're not only entertaining, we're informative.
That's true. So who do we have in here? We have Laloba, Amy Barath, Scape Lander. Let's see, we got buying in Cleveland. Where else? Texas, South Florida. Can you work out this loan in South Florida was the question. Yes, one of the grants. So Dan, should we just dive into one of the grants first, and then we'll take some questions and jump into the second one?
If you don't mind, let's do Laloba, because I don't want to lose that person in the brink of things. They asked the first 5 questions. So if you don't mind, let's answer them because they were the first ones here. So if you're the first ones every week, we'll answer your question first. How about we do that? So everybody can rush over to get in there.
Also, we got Boat Up with Mike said, I made it to my first live with you guys. Or my first,
when he's looking to do that looks fun. I don't know if you
made it to my first love. So I think we're Mike's first love now. Okay, sweet. Let's do this. Laloba said, I hope he talks about the housing market in Texas. I need a house. My credit is a good 745. So just in general, 745. Oh. Amazing credit score. You'll have no problem getting a conventional loan. As long as you have your debt's decently under control. With a conventional loan, you can do a minimum of 3% down as a first-time home buyer. As far as the market in Texas, the tool that Dan and I really like is one called Altos Research. And what you can do here is go to Market Reports. Let me take this off screen so it doesn't auto pull up my address. Dan, what's a zip code that you want to run a report in?
Oh, you know what we get a lot of applications from is Katy, Texas. You want me to look up the zip?
Katy?
Yeah. Katy, Texas is for 3 or 4 years. I don't think it had that massive run up, nor like Austin and some of those areas. So I think that was an area that we that I've gotten even recently. A lot of that name's come up quite a bit.
There's a few zip codes in Texas or Katy, Texas, but we're just going to pull up this one. Oh my goodness, it's going to try to make me sign in. All right, maybe this is a bad to do right here on the live stream. But basically what you can do is, this isn't Katy, Texas, but Altos Research has these free reports that you can pull, showing so much data about what's happening in that local market. And you can separate by all of these different metrics. And so this would be really helpful to talk with your real estate agent about as well, and kind of seeing what's happening in the market and what they anticipate is happening in that the local area. So that's what I would do for all these separate markets, because Dan and I don't have, we don't know everything that's happening in every single market in the US. But tools like that give you access to data that can really help you there.
Looks like we got a lot of Texas people on here today. One says the Boat Up with Mike. I want to know, Mike, do you bow fish? Use your bow when fishing, or did you catch
Is that what that
those
means?
those? Yeah, or do you noodle? You know what noodling is? When you dive down under and you put your
With just your
hand in
hand?
holes, and dude, I couldn't do that. If I'm ever in Texas, I'd like to take you up on bow fishing. I'd love to do that. So, okay, that's enough of
um,
that.
Nina said, first time catching you guys live. Dan, I think this might be the optimal time for us to go live
Yeah.
rather than the night. So let's get into these different programs here. So the first one is let me pull this up. My website I need. The first one is called the One Plus program, and this is a program that we offer. There's a couple other lenders that offer this as well, and it's pretty simple. The first thing is that it's 1% down with a 2% grant. So if you're looking at buying a $300,000 house, you only need to put $3,000 down. You get a gift, a fully forgivable grant of then $6,000. So you have a total of a $9,000 down payment. You only had to come up with $3,000 of that. So 1% of the purchase price, you get 2% as a grant. Now, like I said in the very beginning, is a lot of loans that offer grants or down payment assistance. Normally, you have to pay them back. There's strings attached to it. If you sell within a certain period of time, there's some restrictions, or it comes with its own interest rate. This has none of that. Once you close on the home, you could immediately go and turn around and sell your house, and that grant is completely yours in there. Okay. So with this program, though, there are two really big restrictions. The first one is there's an income limit, which I'll show you. And then the second one is that the maximum loan limit is $350,000. Okay. So that's going to be difficult, I think, for a lot of people in really expensive markets. However, for a lot of people, Dan can attest to this. A lot of people we work with aren't looking at these super, $800,000 plus homes. They're looking at, pretty average priced homes that are going to be, for a lot of people, fit within the $350,000 loan limit. So what you will do, let me pull up my screen share here, is I will go ahead and link to this. Let me put this, I'll put this in the chat here in a second. Or you can Google the Fannie Mae Area Median Income Lookup Tool, this thing right up here. Let me zoom in here a little bit. So you'll go to your area. So let's go to Texas, because apparently everybody's in Texas here. It really zoomed me in. Let's go somewhere over here. Maybe right outside of Dallas. Man, it's tough when it's zoomed in. It's all over the place.
Yeah.
So what we're first looking at here is the 80% area median income. And let me see if I can zoom in just a touch more. So you can see there, I can't move my mouse or it freaks out. Just shy of $80,000 per year is 80% of the area median income. That would be the maximum amount of income that you could make on this loan to be able to get it. So if you're applying by yourself, that means that you would need to be under $80,000 per year of gross income to qualify for 1% down. If you're on this loan with another person, both of you have to be under the income limit. Okay. So if you're buying with a spouse or a partner or whomever, it doesn't double. Everybody has to be under there. Now, let's say you're on the loan, but maybe someone that you're looking at buying the house with or who's going to be living with you isn't on the loan, then their income doesn't have to be counted in here. One little trick that we can use sometimes is if you have variable income, something like commission or bonuses. In some circumstances, we can actually exclude that. If you can still qualify for the loan and get you under the income limit, we can exclude things like commission or bonus income or things like that to help get you under the income limit. So Dan, anything you wanted to cover in this program?
No, what this program is, and Kyle's probably getting to it, it was only eligible if you were looking, or this might be confusing to a lot of people. There's two entities out there that we all use. All banks, mortgage companies, we all use two entities when we're working to get your loan approved. Those entities are Fannie Mae and Freddie Mac. Okay, it doesn't matter if you know who they are, but they're the entities out there. I can assure you they probably approve 90% of all the loans out there if you're looking to buy a home through a mortgage. Okay, this program was only eligible if you ran the loan through Fannie Mae. All right, so the confusing part is Fannie Mae recently hasn't been approving a lot of loans. So when we run your loan through these entities, we use both systems. So we get the most accurate information on you. So we take your application, we pull your credit, we upload your information into Fannie Mae and Freddie Mac. As long as one of them approve your loan, we can approve your loan. Okay. But with the One Plus program, it was only eligible for Fannie Mae, which was, we call it DU because it's desktop underwriting. Well, we were getting tons of people approved through Freddie Mac, but not through Fannie Mae. So it automatically disqualified you from getting this program. Well, what they've done now is they've opened up. Now you can qualify with Fannie Mae and or Freddie Mac. So it might not seem like a big deal to you, but if you tried recently to get into this program, even with us, I might have came back and said, I got you approved for a conventional loan. You only need 3% down. But unfortunately, I couldn't get you through this One Plus program because you weren't approved through Fannie Mae. So if that was a little confusing, just relax a little bit. They've opened up more opportunities for people to get into this program is basically what's behind the scenes.
Yep. And I put the lookup tool in the description. Again, this is a loan that we do in all 50 states, all the U.S. I know some people had questions about, does this work in this county, this city, this state? All of the U.S., this program works. So again, two big requirements here is under that income limit, which the link is in the description. And I put in actually I didn't put in the chat. It's in the description. And then second, it's a $350,000 loan limit. So if you want to qualify or see if you can qualify for that, just go to winthehouseyoulove.com and schedule a call with our team. Let's jump into some questions because we have quite a few. I'm not used to this many people being on these live streams. Thank you all for being here. Let's jump into some questions and then we'll get into the second grant option. If you can't qualify for the income limit or you're looking at a home that's larger than $350,000, then there's another grant program that doesn't have those restrictions that we'll talk about. So, Ape Singh, you said, what is the program? If you rewind on YouTube, rewind like 5 minutes, and I just talked about it. So let's jump into some questions, and then we'll get into grant number 2. Scape Lander said, hello, Dan and Kyle. I'm a contractor here in California. What are the requirements for an FHA one-time closed construction to permanent loan?
So the qualification part is a little bit different than just normal FHA. You need a 620 credit score minimally to qualify, not the 580. Okay, so that's number one. The biggest issue we have with the one-time close is the contractors. I just hung up with a gentleman that I've been working with for about 2 months. I can't get his builder. What we have to do is when we're doing a one-time close, we have to get you, the contractor, basically approved in our system. It's basically that you just give us some financials, give us some references. You'll most likely have no problems getting approved. But I can't get this person's contractor to even just respond to me. I've been calling the accountants and so forth. So the qualifications for the borrower, 620 credit score, and then everything else just matches the FHA findings. You can go up to a 57% debt ratio on the back end and everything else. So everything else is the same, but the credit score is a little bit higher in that. So if there's any other details you'd like, Spacelander, please feel free to email us because I can give you the guidelines. I can even tell you, I can even get you on the list to get you, your contracting company approved in our system. So then other people, if they're going through it and they might even see you're in their area, they might even reach out to you because you're an approved builder in that area. So reach out to us. We'd love to get you access to that program so you can offer it to your clients.
Felix, you said, can you guys work out this loan in South Florida? Yes, it does work in all 50 states. Let's see what else. Do you offer services to help increase credit scores to get an FHA loan? I'm interested in buying a home. So for a service and increasing your credit score, you need to work with a licensed credit repair consultant, coach. I don't know what the correct term is. It's one of those. So we can recommend somebody to work with if you'd like. We both really like a company called My Credit Guy, and I'm not saying it's My Credit Guy. The company's called My Credit Guy. Ran into that once where someone was like, "You keep saying your credit guy, but who is it?"
Who is it?
It's mycreditguy.com. So we both know the owner, Sam Parker. There, they do great work, and so they do a free consult up front. So you'd be interested in talking with them. So talk with somebody who's licensed and can help you with that. Anybody who's helping you with services that isn't doing that license is not going to be giving good advice. Angel, you asked, is 20% down an outdated way to buy? You want to take that?
I'll put it this way. I got right here, I got 12 closings that are scheduled right now on my list. There might be one on there that's putting 20% down. Most people are putting 3 to 5% down normally. Is that good or bad? That's basically the finances that that we're being provided. Our goal here is, a lot of people keep saying, you guys, all you do is pump real estate and FOMO and all this other stuff. Guys, we're just here as a conduit. Once you decide that, buying a house is in your best interest, we're just here to help. But just to give you the direct answer on that, very rarely do people putting down 20% when they're buying a house in today's market.
With that, I made a video on this quite a while ago. If you just search like PMI, Win the House You Love on YouTube, I have a video and a calculator that shows some of this. So basically what I did is made a quick Google sheet that you can use that basically is like, should I wait to save 20% down or buy now and pay mortgage insurance that's required monthly if you don't have 20% down? And it helps you see how by the time that you could save for 20% down, often the home is going to appreciate faster. It's going to grow in value faster than you can save. And usually is going to result in a benefit of purchasing now, using PMI as a tool to gain leverage, to be able to get appreciation for that home over time. And so usually it's better, financially better, mathematically better to purchase with a lower down payment if you don't have the 20% down right now. This is very similar as a strategy that people will use, like high net worth stock traders will use, where they purchase on margin. I'm not suggesting you do that unless you're insane with your investing skill. But this is what stock traders do with investing on margin, is they effectively use a loan to then be able to take advantage of an investment. And so PMI can be used in a very similar way and in a much safer way. Yes, 1% down loan does apply in Texas. Let's see. Jump down here. Felix said, Felix, are you a real estate agent or a loan officer?
I can't see
advisor. It was I had to really look in there. Said, you guys are phenomenal. People sometimes just need to give themselves an opportunity to learn for themselves how these loans work. Thank you again for all the information.
You bet. Thanks for joining us.
Self-taught adult said, chiming in late this time of day is ideal for me too. I've tried to watch your other lives, but the timing never worked for me.
We didn't like it in the evenings either.
Yeah, doing it because I was doing it you were doing it at 6:30 your time. I was doing it at 7:30 my time.
Yeah, you wouldn't get off there sometimes till like 9 o'clock, and it's a long day, folks.
Yeah,
especially in this business.
All over the space. Give a thumbs up, like the video, and share. Subscribe if you're not already.
Wow,
thank you. Appreciate
Thanks so much, everybody. That's kind of awesome.
What's going on here?
The comments on my YouTube videos are much different anymore. People are usually telling me I'm crazy because I'm not predicting a housing crash.
Clavins Durace, I think, interested in buying a house in Austin, Texas. If you scroll a little bit earlier, I think maybe within the first 5-ish minutes of this video, 10 minutes of this video, we talked about a tool called Altos Research, which is a free home research or market research tool. So that's going to be really helpful. Austin is, man, I'm curious what Austin has been doing recently, because I know for a while it was very difficult to buy in Austin.
Yeah, it wasn't difficult. It was, and the difficulty was just the bids. Everybody was buying in Austin, and that was, that's why I was predicting in 2022. I'm like, everybody's fleeing to Texas, especially Austin, and I knew family, friends, and relatives that were buying in Austin. And then all of a sudden, it can't sustain itself. That's why I said in 2023, you're probably going to see Austin being one of the biggest areas of pullback. Well, you saw a little bit of a pullback in 2023, but that kind of turned the tail a little bit. So I think Austin ended up the year down about 9%. It's a far cry from, everybody. A lot of people are predicting, worse than 2008, 20, 30, 40% reduction in values. And Austin actually didn't fare all that bad.
Yeah. All right, we have a lot of questions. Okay, let's
Just we'll just
there's a
fly
lot of
through them. Okay,
there's a lot of questions about does the 1% down grant work in different states? It works in all
everywhere,
50 states. The
everywhere.
1% down works every single place. If you're in the United States, you are good to go. So I am going to skip the questions about does it work in such and such state. Just as a blanket, it works in all of the states.
Yep,
So
everywhere.
we're good there. Really quickly, just want to mention, because Dan and I are really bad about actually talking about what we do,
Yeah.
is that we're licensed loan officers in all 50 states. We can help you get the 1% down loan with a 2% grant, or just any loan like FHA or VA, conventional loans. If you want to, go to winthehouseyoulove.com. And so you can see we just have a really easy 4-step plan. You can schedule a call at a time that works for you. So we're not going to chase you down. We're not going to harass you with phone calls. You schedule a time that works on your schedule. Then we'll have you do a quick 15-minute application. We'll show you your quotes, like your monthly payment, your upfront costs, your interest rate, things like that, so you get a full picture of what you're looking at doing with buying. And then from there, you can always, there's no pressure, there's no obligation to buy a home. You're just there ready to say, I can look at some homes, and if I find one that I love, I'm going to write an offer on it. And if not, you can continue waiting it out. No obligation there. Kind of the big benefit of working with us compared to some other lenders is that we only do one credit pull and one application, but we can shop your loan with 70 different lenders. And we don't do this as a charge. There's no broker fee that we charge you to do this. And we work in all 50 states. So we'd love to be able to help. Let's jump back into some questions, and then we'll cover Grant 2. Dan, can you remind me at some point to jump into Grant
Yep,
2?
I will. I will. Yep, because those questions are starting to load up still.
I know. I'm just sitting here looking. I'm like, oh my god. Okay, let's do a little speed round here. Alrighty, let's see. Here we go.
You're
I'll
bad
take
on
the
the speed round. You just talk and talk. Me, I'm
no.
just right to the point.
Oh, okay, sure. uh, Happy New Year, guys. Does having 4 people, 2 retired and 2 employed on a loan, change the approval odds? It's not going to change the approval odds. 2 people is usually better. Here you go, Dan. You ready for this? It's not going to change the odds. 2 people is usually better than 1. Having 4 starts to complicate things on the loan, makes it a lot more difficult. It's probably going to take just a little bit longer to close. I would say if you can get away with doing 2 people on the loan and then adding the other 2 people on the title, it's probably going to be your best solution than putting all 4 people on a loan, which is just going to be more headaches than it's not going to give you an extra benefit effectively. Look at that. Do you like that? I'm going to
That
prove
was
to you I
awesome.
can answer these.
It's not any harder. It's just harder on our end to keep everything organized. This person with
Yeah.
this job and all that other stuff. But yeah, there shouldn't be any it shouldn't decrease your chances of getting approved. Put it that way.
ZL, good to see you again. Thank you for being on the other stream. Said, did you know that if someone gets laid off, they just give up and stop paying all their bills and go homeless? Crash doomers are acting like people can't get another job.
I know.
It does seem to be the rhetoric sometimes that it's people are
We're going to go into a recession. Everybody's going to lose their job. Everybody can't afford their house at that time. So the markets are going to crash and you'll be able to pick up houses on pennies on the dollar. Unfortunately, that's been going on for the last 3 years that I know of. And we haven't really seen the housing market even turn negative in most of the country. So, oh well. Stay tuned for my 2024 forecast coming up next week. I'm still working on it. It should be pretty interesting.
Sweet.
I was reading his off screen. That's awesome.
Boat Up with Mike said, I use rod and steel. Good
Unreal.
fun. Typically catch and release fishing.
Cool. Love it, man. Love it.
I hate fishing so much. I'm really
man.
sorry to say. I'm just get so bored.
Well, because you're just sitting there hanging out. You're not really fishing and catching.
Is that the problem?
Right.
I'm bad at fishing. Is that the problem? Let's see. Kimas Kitchen. I'm so bad at reading usernames. Hey guys, thanks for all the info. I would like to know, how does income get calculated when it comes to a 2-family home when trying to get approved? You want to take that?
Yeah. So what happens is we can use the proposed rentals from the other unit. So you'd be living in one, and the property would be rented on the in the other unit. So what happens is when the appraisal gets done, there'll be an appraisal or a rental analysis as part of the appraisal process. So it's going to come back and say the market rents in this area are X. So then what you could use is you can use 75% of that amount, and you can basically kind of add it to your income to make sure you're taking that, taking accountability for the income that's going to be produced from that other unit. It's as simple as that. So you can work with your realtor to kind of get an idea what those rents are going to be. So when we're doing your pre-qualification, we can use that number, but the final number is going to be determined by the appraisal.
Ooh, with 12 seconds left. You know
We're
what
on a roll.
I really need to get I think I have the perfect idea of what like to do when the time ends. I think you're gonna love it. It's gonna take me a little bit of time, but
You'll probably just X me out of the screen. I know.
oh, we need a counter that says
How many strikes we get.
who's doing better. Rez said, looking forward to working with the team in about 5 to 6 months. Once I have my down payment and emergency reserves where I want them, keep up the good content, Kyle and Dan. Well, thank you. And great plan on having those emergency reserves saved
Absolutely.
up. So many people go to try to buy a house and then they pay for the closing costs and down payment and have no money left. And that is not the best way to do it. So having some reserve funds is super helpful. Can this work for construction of permanent projects? The 1% down loan will not. It has to be an existing single family home or condo or townhouse. Andy, will 30 days late on my current mortgage that are 3 years old stop me getting approved?
No, they're 30 days. Usually what's looked at is the last year. In some cases, it's the last 6 months. So most cases, you can't have any lates. That's the ultimate scenario. But sometimes you can get away with a late payment that's past 6 months old. So between 6 months and a year, sometimes if the rest of the year credit is good enough, you can get that approved in some cases. But things that are 2-3 years old, those really don't come into play unless you went so far late, maybe you went 6, 7, 8 months late, that it was deemed far enough out that it might even be deemed kind of initial foreclosure. And then that's when you might be starting to get into some issues. But if you really didn't go into default at that time, just had some late pays, maybe went 30 or 60 days late, you should have nothing to worry
about. Smiley Ricewater, will a loan accept you if you want a house below or at $100,000? I want to move to Oklahoma, and the housing market is from $89,000 to $100,000. So our company has a loan limit of $100,000. So anything below that, really what's going to be likely your best option is going with a local credit union. They tend to have better rates and more ability to do some of those smaller loan sizes. So that's probably what's going to be best there. Zachary Liu, should first-time homebuyers pay for 2 home inspections? Keep hearing horror stories of the first inspection missing big, expensive things needing repair.
I don't know this. You might know this. When you get a house inspection, is there any warranties or what's like the E&O insurance that we have? If they miss some blatant things, is there any repercussions that can come back on somebody? I don't know of it. That's why I was asking.
I know.
I wouldn't pay for 2 inspections.
Yeah, I don't think you need to pay for two home inspections. I think there's a better solution that I can help you with in a second. When I did my home inspection, the amount of verbiage that was like, you basically, what's the word? Indemnify? Is that the right way to say it?
Yeah.
Yeah. Basically, they have zero liability kind of thing where it's like, hey, we're going to do our best. And usually what these inspection companies will do is you're going to get a report that is just like quite a few pages.
It's huge.
I usually tell people that, like, a good inspection report is going to act like this, everything's falling apart. And just note that it isn't. It doesn't mean that every home, even new homes, are going to have all of these things that get caught from a home inspection. Even things down to, like, I've seen where it will be like the corner of the wall doesn't have like, or around the bath doesn't have like caulk, like 1 centimeter. Like those types of things might get flagged on the home inspection. Doesn't mean the home is a bad purchase. But when it comes to these big things, usually what they're doing is using all this documentation to cover themselves in the event that you're like, hey, this thing happened, and they can show here, well, here's a 20-page report, and we can show you, we took pictures of it, we scanned it, we did a thermal image of this. So what I would suggest is one home inspection and then also a home warranty.
That's
So
what I
either
was
have
just gonna
the
say.
seller pay for the home warranty, or is that what you're writing down? Or
Yep.
you pay for it, see if your realtor offers incentive to pay for it. Home warranties, I think for a lot of people can feel like they're a scam thing or like an added fee that's not going to benefit you. Home warranties, most of them, like look into the actually read your home warranty offering, are fantastic, cover so much. And you can also look at your insurance company and see if they offer something similar. My insurance company, I'm trying to think, I don't think I have a home warranty that I remember getting, but my insurance company has kind of a pseudo home warranty that covers an insane amount of things. And it was an extra like $4 a month. Like it will pay for an entire new furnace if anything happens. If annually I can have someone come out and check all of my HVAC system, all for free through those programs. So that's what I would do. I think it's going to give you better coverage than 2 home inspections.
I put it down also. You can't see it, but it's there. I always thought they were. I'll say it in the different word than I would have used. BS. I always thought they were BS. Then I got one on my house about 4 years ago. I'll never go without one. They've come out and fixed my refrigerator, my freezers, my washers, my dryers, my microwaves. They put a new air conditioner in last year, prorated it, and I owed $700, and the unit was worth like $5,500. So I love it, and that's why I always tell the buyers now, like if you have any concerns, look at getting a home warranty.
I swear it's one of those things that people get and then they forget about it and don't use. And that's probably why they're able to like offer
So I use
something
mine.
so much.
Yeah.
Because probably a lot of people either forget that they have it or just don't use it and they go and pay for something without checking if the warranty covers it. So we have like 160 people on the multi-stream here. So thank you all for being here. We really appreciate
thank
it.
you so
Also,
much.
this is way more people than we're normally have. So just a quick aside while you are here, if you are looking at getting pre-qualified, you can go to winthehouseyoulove.com. And we'd be happy to help. You just schedule a call with our team at a time that works for you. We're not big on like harassing you with phone calls and texts and stuff. You schedule a time that works. We'd be happy to talk with you, and happy to see if we can give you a quote that works.
And basically, the consultations are like this. We're just here to answer your questions. We aren't forcing you to buy a house. We aren't going to call you every week to see if you're looking to buy a house again. We're here to answer your questions and then leave it up to you. You know where to find us if you need our help.
Okay, so at some point we need to get into grant number 2.
you
Here's a good
wanna
question
just do
for
that
you,
real
Dan.
quick?
Yeah,
Okay,
you
yep.
want to answer this first? ZL said, does it sound normal to pay $5,000 total fees for a VA Earl, $288,000 loan amount?
Not really. Well, it depends on where you live because title fees, the only thing that you would incur with a VA Earl, what a VA Earl is for anybody out there that doesn't know, if you have a government sponsored or government backed loan, and that's VA, FHA, and USDA. When it's time to refinance, now the rule of thumb on refinancing is once rates go down 1%, you might look to refinance, but it also depends on your loan size. Okay, if you have a $500,000, $600,000, $700,000, $800,000 loan, maybe a 0.5% in the rate would suffice and save you enough money. But what you got to look at is the VA Earl and what I was talking about, the FHA, USDA, and VA. They have what's called a streamline refinance, and it's this. They look back. All we really do is we pull your credit, and as long as your credit score suffices for the guidelines of the program, and USDA or VA is about 580, normally about 580. That we pull your credit, we get to credit score, and we get your mortgage rating. That's it. You don't have to re-verify your income. You don't need a new appraisal. You don't really need much of anything because what the guidelines or what they're looking at is they're saying, okay, you already have a VA loan now and you're paying us fine. You never missed a payment. And now you're looking to reduce your rate, and the reduced rate's going to cause your payment to go down. So if you've already been making the payments on a higher payment, we're okay with just refinancing you and allowing you to just refinance and with really not much qualifications again because you're paying us now. Now, the closing costs are where a lot of people, even mainstream media and YouTubers, start to freak out. It's like, remember, you're going to have all those closing costs again. Well, the closing costs normally, like say I can vouch for Illinois. In Illinois, if you're looking to buy a house, your title fees are probably going to range you about 4 or 5,000 bucks. Okay, that's just the title fees. When you're doing a refinance, the fee's like 800 bucks. So it depends on, in your case, I can't really specifically say that's good or bad. We do have, Kyle, if you can pop up that loan estimate thing that we offer, we have people that upload their loan estimates every day, and I analyze what you're being offered to other programs out there, because we actually, Kyle and I work at a federal bank, okay, in Illinois. That means working at the federal bank allows us to be licensed all throughout the country. So we're licensed in all 50 states as well as Puerto Rico. But we're also one of the country's largest brokers. So that's usually not the same combination. Usually you're either a broker or you're a bank. Well, we're a combination of the two. So because of that, we have the option or availability to work with up to 70 other lenders that we've already established with. We've gone through all their due diligences, and we've signed up with all these other lenders. We can offer you their rates and their programs. Okay, so that's how this works. It's a really unique scenario, and that's why we're here at the bank, because we can offer basically these services to everybody in the whole country that, like I said, is very, very unique. So if you can email us your loan estimate, let me review it, get right back to you. We can even work one-on-one. I can let you know if that's a great deal you're getting or you're kind of getting hosed, and we can really reduce those costs for you.
Yeah, so that site is whenthehouseyoulove.com, and then just go to tools and compare your quote, and then that's where you can upload your loan estimate securely. It will come to Dan and I, and then we can review that with you. So what we do with those is we'll send you a video back showing you, all the quotes pulled up on our screen from different lenders along with your quote, and then we'll compare them side by side. Let's see. Anthony Cruz said, anybody who has concern, they're very helpful, and I'm currently working with Dan. Got an offer accepted as well.
Anthony, thanks for joining us, man.
Accepted offer. Do you have a team in Georgia? We were located in Naperville. It's where our office is, but we work in all 50 states. So we'd be happy to help you in all 50 states. You can get pre-qualified, whenthehouseyoulove.com, and schedule a call. We kind of flip it around. What most lenders do is they, you fill out your information, and then they're like going to harass you for like weeks or months on end.
Yeah.
We just give you our calendar. We'll show you when we're available. You schedule time that works for you, and then we'll connect then. We're not going to harass you because I don't like when that happens, and we don't like doing that to other people.
Nor do I.
Yeah, so let's get into grant number 2, and then we will jump back into some questions here. And thank you all for being here. Really appreciate it. This is, again, I'm amazed at how many people are here right now, because this is not normal. But thank you for being here. So grant number 1, what we first talked about was the 1+ program. And that's offered by very few lenders in the U.S. It's not something you can go to every single lender and they're going to offer it. It's something that our company offers. I can't vouch for what other companies are offering. But the 1+ grant was 1% down, and you get a 2% entirely forgivable grant. So if you're looking at buying a $300,000 house, you put $3,000 down. You get $6,000 that you don't have to pay back. There's no interest on it. You can sell at any time. So you have a total $9,000 down payment, and you only had to contribute $3,000 of that. Now, the issue with that program is there was an income limit, and I put that link in the tool or in the description for how to look up your income limit. And there's a loan limit of $350,000. So if those two restrictions are like, I can't do that, I make above the income limit, or I need a higher loan amount, there is a second grant called the Purchase Plus grant. And so you can go to whenthehouseyoulove.com/purchase plus, and there's a quick little qualifier tool in here to see if you can qualify for this. So this program is based on where you currently live, not where you're looking at buying. And it's a $5,250 grant. Again, no interest, no repayment. You can sell at any time. So what you have to do is you have to currently live in one of these areas below. So I know it's kind of small.
Where can they find this? Where can they find this this site?
It's whenthehouseyoulove.com/purchase plus. So
is it under the tools section?
No, not at the moment. But okay. I can put it there maybe after the stream. But Purchase
Okay.
Plus, just spell it out like that. And I can also put it in the description here in just a second. So some of the areas we have: Chicago, Naperville, Baltimore, Detroit, St. Louis, St. Louis. I don't know. Someone's going to be upset about that. New York City, Cleveland, Oklahoma City, Philadelphia, Memphis, Washington, D.C. I'm skipping over a couple. Basically, if you live in one of these areas, we would then go to step 2. So we need a 620 or higher. You have to be a first-time homebuyer, and you can't have a mortgage on any other home. Okay, so these are kind of the 3 big criteria. Now, the one kind of strange thing about this program is it's based on the census tract that you're in. So I have some quick instructions on how to look up your current address on the census geocoder. So all you do, go to that site, type in your address, and then you would paste in what that number is. So I'm just going to pull up one of these areas here. There's 12,712 areas that qualify. Okay, so if you have a qualifying area, it will then show you that you qualify for this grant. And I have a quick little calculator you can use to explore some of that math again. So that's a really great program if you're in one of those qualifying areas. These programs can't be connected. You can't put them on top of each other. It's one or the other. The 1% grant, the 1+ program, is the better option, but it does have that income restriction and the loan limit restriction that can be a little tough.
Cool. And it's crazy because it's, I don't know if you guys paid attention to it. It's where you currently live, not where you're buying. So if you're living like Chicago and you're looking to buy in, I don't know, way out in the suburbs, say, you might even qualify for this. So it's where you currently live, not where you're buying.
Yep. Can you buy a duplex with us? Yes, you can. And then Lewis, it's also, it's not based on zip code. It's based on the census tract, which is a smaller area than a zip code. So what you can do is search your current home address on that census geocoder. I might as well just link in that URL, shouldn't I? I'll put this here in the chat. There are instructions on there on how to put in your address, find the census tract you're in, paste it in there, and it makes it really easy to figure that out. The previous way was to search through a huge Excel list. And that was obnoxious to do. All right, let's jump into some other questions here. Let me go back to the list of where we're at. Okay.
I'm glad you do this part because there was no way I'd be able to pick up where we left off.
Well, my program lets me put like a little star next to the comments.
Oh, cool.
There's so many comments that it's kind of hard to keep track. Can you combine the 1+ grant with another grant? First of all, no. Or loans like FHA or USDA? No. So it is a conventional loan that you get this grant with. You can't combine it with anything else. You can't combine it with another grant. It is just itself, and it is only a conventional loan. Angel said, "Hi again. I'm aiming to purchase a home with my fiance in October 24. I have a condo that I bought 3 years ago and has gained about $60,000 in equity. Does it make sense to sell or turn it into a rental?" You want to take that?
I would just say it's your finances. That's a decision on your end, because if you bought it 3 years ago, let's say your rate is 5% or lower, just throwing that out there, or maybe lower. Do you need the cash to buy the next house? Are you comfortable having a rental property? Because everybody's not cracked up to be a landlord. You have to make sure, unless you get a property management company. So if you want the cash flow, it might be a good way to do that. But also, here's my reluctancy on rentals. I used to have rentals back when, but then you start having all these issues with the thing. You need a property manager. The house goes bad, the roof goes out. You need to replace the roof. The furnace goes out. There's $5,000. So unless this is really your passion and you're into it, I'm not a landlord. It just didn't fit my cup of tea. It didn't fit my lifestyle. You might be on the other hand saying, I can manage this stuff. So it's good. Like you just saw, your house appreciated in value. It's most likely over the next 5, 6, 7, 8 years, going to keep going up in values. There might be a little dip here and there, but overall you're going to have, increased value in that property. But do you want the headaches? because does come with headaches of having a rental property. The perks is you can write a lot of things off on your taxes. You can have some cash flow, and you're sitting on an asset that's appreciating. On the other side, it can be an expense. There could be vacancies in the property. You could have major repairs needed to the property. So do you have enough funds to be able to do that in the background, or are you willing to do that? Those are the things I would look at.
I like it. James said, what DTI do you typically advise clients to stay under when looking for a home? My wife and I make pretty good income, but home prices are so high in SoCal. Yeah, it's really tough because DTI honestly is just a really bad metric of understanding home affordability. The debt to income ratio is what lenders use to see, how much you can qualify for a home, but it's really bad in an actual like budgeting sense on like what's going to be comfortable for you and your family with buying a home. Because maybe you have two incomes and you're high earners, then a 30% debt to income ratio looks completely different than a single person or a couple who maybe makes on the lower end of the income side. Because if you're a high earner, you have a lot of residual income left over, and a percentage just isn't a good metric of that. Also, like, what are your goals, or where is your financial situation at right now? If you're younger, maybe you have a lot that you need to put into retirement saving or paying down debt or having an emergency fund. If you're older, you have a little bit more wiggle room where maybe you already have a retirement fund set up. You don't have any debt. And so it's really just not a good metric, I think, for what you can truly afford. What I would really suggest is, instead of looking at DTI, is doing a really kind of deep dive into your budget and seeing, does your budget align with the goals that you have? You want to be somewhere in 5 years, 10 years, you want your finances to look a certain way. I would see, is your current budget aligning with where you want to go in the next 3 years, 5 years, 10 years? And then make adjustments there rather than just looking at a debt to income ratio, because DTI doesn't factor in what you want your life to look like. Do you want to travel? Do you want to stay at home? Some people want to have a nice house that they stay in all the time with a huge backyard. Other people want a small house and they want to be able to go do more things. So I hope that helps. What's the con with getting a grant for the down payment? You want to take that?
Yeah, in this case, the rate is a little higher. I think what the study that they did on that was the rate was 0.22% higher. That's all I can really think of. Somebody asked a question on the sideline saying, if I did this, only put down 1%, can I refinance, down the road? You might be able to. A lot of people, their concern is the housing crash again. If house prices come down, can you refinance? I don't know. Most likely it depends on how far they go down, but you can't keep thinking the negatives. You should be able to refinance, but in this case, you're getting free money with that grant program. You got to figure that out. If you're buying a $300,000 house, you're getting $6,000 in actually cash. So maybe keep the loan for a year, or even less than that. When rates come down, look to refinance. And then basically that money was completely free to you. Now, if your house value drops, you might have a little bit of a tougher time refinancing. But, those are things you can't, what am I looking for? You can't live life in the doom and gloom scenarios. What if I, wrecked in a car wreck on my way home? I won't be able to work tomorrow. So you have to just look at it as is today. So there isn't really much of a con other than the rate is just a little bit higher than the normal rates out there, but you're getting actually money that you really don't have to pay back. I won't say it's free because you're paying a little bit higher in the rate, but it's a pretty darn good deal.
Yeah, especially compared to a lot of other grant programs that are going to require some sort of repayment. These are the only, and that's why like Dan and I don't often talk about some down payment assistance programs, is because they put people, we think, in some worse financial situations than if they didn't have the program. Whereas these are the only ones we've seen, not the only, but some of the few we've seen that really are beneficial. Yeah. Felix, you said, do you have a link where we can read about these? I have videos on both of these programs that are pretty recent, within the past couple months. I don't have any like articles, but I do have super in-depth videos on both the 1% down and the Purchase Plus on my YouTube channel.
I got to do
Um,
one with the Purchase Plus. I haven't done one yet on that one.
yeah, you got to hop on that.
I know.
Refi closed late August, 7% rate, got a 3-2-1 buy down. Waiting for rates to go down so I can refi using the remaining money from the 3-2-1. That sounds like you got a nice
That's
strategy
perfect.
going on there. I can get $20,000 back if I refi by March 24th. What's the better strategy? I don't know. What do they mean by better strategy? Do you know what they mean? Or what? Maybe
So I can
which?
refinance you using remainder money from. I can get 25,000 if I renew by. Yeah, I don't know. Would keeping it or refinancing it? If you're in the 7-ish rate, reach out to us. Just reach out to, do a schedule consultation. Let's figure out what kind of rate you'd be looking at if you refinanced, and would that help you out? Because you're
Yeah,
getting 20,000 back, it's actually going to that'll be taken off of your payoff. So right then and there, you're gaining 20 grand. So your loan amount's going to be 20,000 less. And then you're hopefully most likely getting a much lower rate. So your payment could actually come down quite a bit. And then let's
yeah,
say rates continue to go down and down and down. In most areas, you can refinance for under $1,500. So you might want to look at doing it again.
yeah. And just,
That's what I would do.
I'm curious if the only thing I was confused on is like, what's the better strategy? I was like, what are there two different strategies in here? The strategy that you have is brilliant. What you set up is great. Whoever helped you work through that, you have a great setup right now. Don't feel like you have to refinance by March 24th to get $20,000 back. When you do the temporary buy downs, the 2-1 buy downs, the 1-0 buy downs, 3-2-1 buy downs, that money doesn't disappear. It's going to keep being applied to your monthly payment. So even if you didn't, maybe you used it for the entire 3 years, you used up all that money, it's not like that money disappeared. You're still getting the benefit of that money. It's just not in a lump sum. It's coming as a monthly payment to you. So don't I don't know where you got like who told you March 24th. You might have seen $20,000 and be like, I need to use that. You don't have to use it. Like, don't feel like you have to refinance by March 24th. You can refinance all the way at the end of the 3-2-1 or even after, if you want to keep waiting to see where rates are going to come down, because odds are by March 24th, we're not going to hit the lowest point of rates in the near future. That's likely going to be closer to, Dan, would you say maybe fall, maybe
Yeah,
winter
I'm
of
thinking
24?
the third quarter of 2024 when you're going to start seeing more and more pieces of this puzzle come into play.
Yeah. So just don't feel like there's no pressure to refinance.
Yep.
That money will not disappear for you. You're still going to have it.
There was Felix also mentioned in there. He said, "I believe people are afraid of reaching out to you guys and consulting these questions because they think you might charge for them. Our consultations they're free. This is what we do with you on the phone. We just go over and answer any questions you have, and then if those questions are what you were looking for and hoping for, and you now think you might be ready to get the application started, we'll send you a link to get that application started. If during that consultation you're like, I just don't think it's in the cards for me right now, I'm like, well, God bless you. Keep my information handy, and maybe 6 months down the road, if you want to talk again, let me know. That's basically how the conversations go.
Yeah. Angel said, good afternoon from Hummelstown, PA. Close with the ONE+ program. That's awesome.
Oh, yes. Hey, Angel. I remember. We closed his loan.
Self-taught adult. You're the first person online and locally that explains these things in a normal way we can understand. Well, thank you. I really appreciate it. Christopher, did you guys already go over the 1% down? Yes, we did. So we covered it within maybe the first 10 minutes of this video.
But our simulcast is over, go back kind of at after about first 5 minutes of this video, and we go in detail. Kyle will show you websites and some other things and walk you through exactly how that works.
Yep. Peaceful ways. I have 2 incomes. Will they both be counted in the state of Texas?
Yes. Unless there's a reason why they shouldn't be. So as long as that income is, I don't know if there's a kind of a catch in there, and I'm not trying to say you're trying to catch me on this, but yeah, if you've worked 2 full jobs, and you've been there forever and whatever, yeah, we can use those. If it's two different people, yes, we can use those. If it's a full-time job and a part-time job, we can use the part-time job as long as you've been there for 2 years or more. So I'm trying to cover all the kind of the gray areas of that question. So yes, there shouldn't be any reasons why you can't use that secondary income unless it's part-time that's been established less than 2 years ago.
Adrian, the best part of your consultations is I never felt like I was being pressured to buy something. It really helped to understand my options when buying. Well, it's awesome. I'm really glad to hear. And we so need more like testimonials. We've been really bad at collecting these. So Adrian, if you wouldn't mind, if you want to shoot, I'll put my email here in this. If you wouldn't mind writing up a quick testimonial for us, that'd be really helpful. Because we don't always do a great job.
Here's my fear when I watch things like this and even commercials, and I hate calling in because you're just going to get pounded. Like last week, right before we went live, I needed homeowners insurance for my mom. Her homeowners insurance expired, and I'm like, okay, let me see if I can get her a better deal. So dumbass me, I go online and I put in, who's got the best mortgage interest, insurance quotes and whatever. So I hit this thing, fill it out, and for the next, I got 2 calls just now during this live. So that was a week ago. You just get called and called and called. We don't do that. We just show you, you set up a consultation with us. We're there usually 15, 20 minutes. We answer all the questions that you have just like this. And then we're like, okay, if there's any other questions you have, let us know. If you'd like to apply, we'll send you a link to start the application. Other than that, have a fantastic day. God bless you and hope to see you soon. Yeah. And that's how the consultations go. This isn't something that we should be talking you into is buying a house. It's probably one of the biggest things other than getting married or having children, some of the biggest events of your life. So don't let us either detract you from or talk you into buying a house. It's your decision.
What would you say to someone who wants to become a loan officer? This is a tough time to become a loan officer.
Learn how to weld.
You say weld?
Welders are needed.
As you're saying, a completely different job.
Building stuff. You want to answer that? You go ahead and answer.
Sure. I mean, it's right now is a really tough time to get into real estate. With everything that's happening in the housing market, you have so many people who are going and doing other jobs because it's just extremely difficult. And being a loan officer particularly has its own difficulty with it because where are you going to find people to work with? Most people are harassing real estate agents, and almost everyone in my family is a real estate agent. They get harassed by lenders all the time to work with them, and so it's how can you stand out? And so that's why we have this YouTube channel. Is Dan and I we're tired of talking with the realtors and trying to convince them to work with us because it's exhausting.
Hey, on the 15th, just so you know, on the 15th. It'll be 34 years of me doing this.
Really?
On January 15th, wow. 34 years ago.
34? I thought you were 34.
I forget that guy's name, but if you want bags like this and going gray, I'm only 40. So.
See, well, every time I say it, I'm like, Dan's been doing this longer than I've been alive. You're like, hey.
I have been. So, and I'm starting to get proud of it again. So
nice. Were you not proud of it for a bit?
Yeah. You know what? The last couple of years have been just daunting, put it that way. And it's, I've done this forever. It's all I know how to do. My biggest kick out of this is when you get that person that you pre-qualified and then they call you and got that offer accepted and they're just on cloud 9 and they're ecstatic about it. It's just helping somebody get to that point of life. It's rewarding and we try our best.
Oh, let's see. Andrew, I'm looking to use a USDA guaranteed loan in Navasota. Is that right? Navasota, Texas, with about $7,000 in liquid cash and a 2% debt to income ratio. So you basically have no debt. 740 score. Should I shop around credit unions for rates or maybe go with a conventional loan instead? Here's what I would suggest. With a 740 score, it depends, how big of a home you're looking at purchasing. I would try to go conventional. You have a high enough score to do it. For a first-time buyer, it's going to be 3% down, or you do like the grant program, that 1% down program. If you're under the income limit and under the loan limit, that could be really good for you. The reason why I'm going to suggest conventional is in market, we're in largely a seller's market across the U.S. It's going to be more attractive to a seller than a USDA loan is. It's just because conventional appraisals are easier to get done. They have less requirements than any type of government loan like USDA, FHA, or VA. And a seller, really one of their top priorities or the most attractive offer is going to be cash. And then second to that is going to be conventional. If your conventional offer is slightly higher than the cash offers, often the seller will go with the conventional loan over the cash, because it usually doesn't, maybe takes 30 days to close on the conventional loan. Cash is going to take maybe 2 weeks. And so often a seller will be willing to wait another 2 weeks to get a slightly higher net profit. So USDA, absolutely possible, but I would suggest conventional to just have a higher chance of your offer winning. Often people will look at USDA, great loan program, same thing with FHA, great loan program, but when they're going up against other home buyers who are competing for the same home, their offer just doesn't stand out as much as a conventional offer will.
Yeah. Yep.
Okie dokie. This comes up every once in a while. In this economy, is it better to buy a new build or an older home?
It depends, I guess. And I don't mean to keep diverting off of, the specific answers to these questions. But when you're building, you need to find land. And in many areas, land is sparse. And that's what's, that's what's keeping a lot of builders out of the market. That's what's keeping, the inventory down as much as it is, because land is, it's valuable. The prices keep going up and up and up, and it's getting scarce. So if you're in an area that's completely wide open, maybe look to build. Planning on building makes the hair on the back of my neck stand up. I have no desire to build a house, but that's me. I don't want to go through the blueprint stage and all this other stuff. I'd rather buy a house that I like the bones, that I can go in there and do what I want to the house and everything else. But other people just love to build. Like my sister, I think they're building their third or fourth house now in her life. So I've never built a house. I have no intentions of building a house. So in this market, I think it might be easier to find a pre-existing house, but I don't know what area you're in. So I don't know if there's a lot of land or not, but most likely it's going to be easier to buy an existing house than it is to build.
Christopher, I gotta switch this back. What are some things about a home that FHA appraisals will flag, causing the loan not to fund? Some of the most annoying things are the smallest, the smallest things. Biggest one would be chipping paint. Doesn't matter if it was it's lead-based paint or not. If there's chipping paint, an appraiser is going to say something about it, and it's as simple as just scraping it off and repainting it. And it's usually just a spot, like a small spot or a section of a home. And realtors should know better. Well, maybe I don't know. Maybe they don't. But it's amazing how many times I'll talk to a realtor and be like, "Hey, if it has chipping paint, please fix that before the appraiser comes out." And then the appraisal comes back and there's chipping paint. I'm like, you guys.
They come down all the way to there's no smoke detectors in the house, and it'll get tagged, and that you have to put smoke detectors in the house, and the appraiser has to go back out there and validate it. So there's a lot of little things, but it's not as we come across and make it seem that extreme. And that's why a lot of realtors and a lot of sellers don't want to take an FHA approval or pre-approval. But on the other side is a lot of these things that FHA is going to find wrong with the house, you probably want fixed anyways. Okay. So when a conventional appraiser comes out to do the house, their whole goal is to figure out what the value of the house is, period. That's it. When you're getting an FHA or VA or USDA appraisal, those appraisers have higher certificate levels than the normal appraiser. And they're also going to do more due diligence. They're more out they want to make sure the house is the number one priority is safe for you and your family. Then number two is the value there. So they're going to go and they're going to scrutinize all the areas, there's mold, there's this, but sometimes they do get way out of hand, and there's basically a scratched piece of paint up there and they might tag that. And it's like, really? But it usually doesn't get that bad. We take the extremes, but sometimes it does happen that way.
Yeah, the common things are like so small and require this. It's such a quick fix, but everyone gets up in arms about it. It'll usually be
Yeah.
something like chipping paint, or often I see a handrail is missing on steps, either outside or inside. Sometimes even if it's like 3 steps outside, code says you have to have a handrail. So FHA is going to require you to follow code. So it's as simple as like you can put in a temporary with like a 4x4 and 2x4 wood, like drill, put it in, get a little bit of handrail. That works. Other
It does
things,
work.
I've seen wiring hanging down from the ceiling. Like Dan was mentioning, it's like these are some safety things that you should probably be okay with. But people get up in arms. The amount of times I've been yelled at by a listing agent because there was chipping paint or a missing handrail, and I'm like, you should have known this. You should have had this fixed. This isn't our
Right.
fault. Also,
Yeah.
it's not a big deal. Like, go to Lowe's and spend $20 and fix it. This is kind of your
That's what's
job.
tough sometimes because they overreact on all these things. And it's like, well, you're the buyer's agent. Don't you want your buyer to have, walk in there and not have to deal with this stuff? Just saying.
Yeah. Also, just not big problems.
Yeah.
They're not big
Yeah.
problems.
Crack foundations,
Uh,
that's a problem.
Luis, can I use this as an investor? I'm assuming you were talking about the grant programs. If so, they're only for if you're buying a home as a primary residence, you intend on living there for at least a year. With all these loans, you can sell at any time, but if you're going to rent them out, you need to live in them for at least a year. What are the current rates for USDA loan? Go to whenthehouseyoulove.com/rates and shows all the national average rates there. Jennifer Jones, are there any programs for rural nursing housing loan for first-time buyers with no down payment? Rural nursing housing? I'm not familiar with a program like that.
I don't know. Unless it's like a
Rural
traveling
nursing?
nurses where, well, some people are doing the
Oh,
traveling, house hacking. They'll buy a house and rent out every bedroom to traveling nurses. And it's a great idea. I don't know if that's what she
hmm.
was asking for or not. So those are ones when you have really specifics like that. We're not trying to be vague. We need a little more context to give you the answers. Please just schedule a consultation with us, and we'd love to answer those questions. And then if we can't answer it, we'll find you the answers.
I'm still amazed. We got 160 so people here on all the streams. So thank you all for being here. Really appreciate it.
Yeah.
It's kind of nice that there's actually people who want to watch.
Yeah. Seriously.
How about putting it together a grant to build tiny homes? Let's help people really afford a home. The unfortunate thing about tiny homes is that most of them are not going to be able to get a mortgage. Usually you're going to need a chattel loan, which effectively is a personal loan to be able to finance a tiny home or find some other way to pull that money together. If mortgage guidelines and such catch up with things like tiny homes, I think that would be really cool. It could help a lot of people stop paying rent and get into something that they own. But at the moment, it just does. More traditional mortgages don't work for tiny homes. Meowica. Speaking of meow, did you know, Dan? I adopted a kitten.
Did you really?
She's real cute.
So you have 2 now?
I have 2 now. I'm transforming into a cat lady. Wait until I reach my final form. She's locked in a room right now because my other cat does not like her.
Doesn't like her. Got it.
But they'll warm up. Could you speak on an assumable loan? I don't know how you would even go about finding a lower interest rate using that. So an assumable loan is kind of been the unicorn of this past year. Does that make sense? Everybody wants, I don't know. It's something a lot of people are talking about. A lot of people want to see. You got me on the unicorn. Thanks. Appreciate the support. A lot of people want to see this is a cool new hack thing. Assumable loans have been around forever.
Ever.
And effectively, with an FHA loan, VA loan, sometimes USDA, most of the time not conventional. Basically, if someone had like an FHA loan, let's say it's at a 3% rate, you could actually work with that mortgage company that the loan is with to take over the loan at that lower rate. The problem is you have to come up with the difference between the loan amount and the purchase price. So if the seller purchased it at $300,000, and now their loan balance is, let's say, I don't know, $250,000, but the home appreciated to now being $350,000. There's a $100,000 gap, and the new lender is not going to finance that for you. You would have to come up with where you're going to get $100,000 to take over this loan. That on top of it's a really long process, and the reason why is because lenders don't make money on assumable loans. If they do, it's very small, so they don't put a lot of resources to them. It's going to take a lot longer. They don't make really any money on it, and so they're just, why are they going to have a ton of staff doing assumable loans? So they're also really difficult to find because only the seller can offer something like that if their loan is assumable. It's not something you can go out and shop for assumable loans. It's something that has to be negotiated with the seller. So they're really cool in concept.
Yeah.
I've never heard of someone being able to successfully get it done.
Never either, ever.
Even if the loan is assumable, there's usually something that gets in the way of that happening. So again, super cool concept, been around forever. Never heard of somebody doing it successfully. Okie dokie. Let's see what other questions we have.
You grab one more because I have a laundry list of stuff to do the rest of the day.
Yes. Let's do another question here. We're getting some just regular comments. Y'all are smart guys. Thanks.
Thanks.
I'm just trying to find a good question here to end on. Here's a good one. If your second income is a gig driver, can you qualify for a conventional loan? You want to take that?
Yeah. I'm actually doing one right now. The person's I don't know what you mean by gig driver, but they work at Lyft. As long as that income is documented on your taxes and you've been doing it for 2 years or more, yeah, you can use that income to qualify.
Sweet.
You thought it was going to be a longer answer than that, didn't you?
I did zone out, The Angel said, if a house appraised over the selling price, we did $30,000 renovation after that, will my next appraisal come in $30,000 over, or is it just based on recent sales? I really want to cover this because I just want to quickly talk about renovations and the money that you get back from renovations. So let's say that the home appraised for $300,000, you bought it for $300,000, you did $30,000 of renovation work. So theoretically, the home is worth $330,000. If you try to sell it the next day, it's not guaranteed that you'll get that money back. Renovations aren't a one-for-one. You can't tell the seller, I did $30,000 of work, so pay me $30,000 for it. It's going to be based on recent sales. So almost all residential homes that you're looking at buying are going to be appraised based on a comparable or sales comparison approach. So basically, they're going to look at your home compared to all the other homes in the area, and they're going to use basically what is the average of these other homes to inform what the appraised value of your home is. And so often people will get into trouble when, this is a very simplistic view, but let's say you bought a home in a neighborhood and all the homes in the neighborhood maybe are a little bit outdated. Let's say they're from the 80s. You did some work on your home. You put in beautiful granite countertops and these lovely wood floors and everything's completely redone. You're not going to get your money back one for one on that because the value of your home is going to be compared to the other homes. Now, you're going to have a higher quality rating in your appraisal about your home because it's updated, but it's not always going to be a one-to-one thing. It's going to take some time for you to recoup that money in an appraisal. So hope that that helps. So really quickly,
Angel.
thank you all for being here. We'd love to help you get pre-qualified. We work in all 50 states. So you can just schedule a call, winthehouseyoulove.com. You can schedule a call with a licensed mortgage advisor on our team. And like someone was saying earlier, we don't pressure you to buy. We're not going to hound you. We're not going to text you and call you all the time. We just want to answer your questions just like we do on these live streams. And if you want to move forward with doing an application, it takes 15 minutes. We'll show you your quotes, get you pre-qualified. That way you can shop for homes when you're ready. Or you can just say, hey, I don't want to buy right now, and just wait it out for a time that works better for you. So we're going to do this again, same time, same place next week on both my channel, Dan's channel. 3, did we start this at 3? 3 Eastern.
Yep. 3 Eastern, 2 Central.
on Wednesday. And if
Yep.
you have a question for us, just go to winthehouseyoulove.com. There's a right on the homepage. You can click ask a question, and we can answer it that way as well. So thank you all for being here. We'll see you all next week, and we'll talk to you
God
soon.
bless. Have a